welcome to the Sport and Crypto podcast, back again with another episode. And in this one, I'm excited to be joined by Ahmed Nimale, who is the CEO and co-founder of KYD Labs. How's it going, Ahmed?
Hey, it's going good. It's going good. It's a bright Tuesday. Happy New Year to you and your audience, and stoked to be here.
Yeah, stoked to have you. We haven't had that many blockchain ticketing conversations on the show, which is surprising considering how much I've covered and written about it. So why don't you start by telling us a bit about your background, your journey, and what you've been up to up until now?
Yeah, well, I don't blame you on the blockchain ticketing side because a lot of them don't survive after a few years. Yeah, like to give you some context on myself. So I'm the son of a musician. My mother was a musician from Ethiopia, came to Canada. Used to watch her sing at coffee shops, had a really religious father. So very funny, fundamentally complex relationship with my parents. But I've always been in love with music, had no relative talent for it or creative talent for it. But ultimately found myself in the ticketing industry where I've worked at the world's largest secondary provider, Vivid Seats, and then ultimately Ticketmaster, working on data, general admission ticketing for some of the world's largest shows, whether it be Taylor Swift, Dua Lipa, The Weeknd, Drake, and so on and so forth. Really, in that journey, I learned a lot about how the business actually works. Most people assume ticketing companies are just a way to sell tickets or ours to sell tickets. But in reality, ticketing companies are a bank. Ticketmaster has the highest paid CFO in the world and highest paid finance team in the world. And if you look at what their core business is, it's effectively being able to say, hey, music venue or soccer team or NFL team, here's some sponsorship capital up front based on your past sales. Let's do an exclusive deal. And ultimately, that's the way they get in. They're just a glorified, checkout page with a bank behind it. And, when we look to the issues we face today, a lot of that stems from that, whether it be data ownership, being able to find out who the fans are. In exchange for this capital, a lot of stadiums, a lot of venues, a lot of artists give up their fundamental data rights. And Live Nation, the parent company of Ticketmaster, uses that to produce their own shows. So it's very counterintuitive to them, and they're honestly the only bank, and they own about 70% market share in the US today. So I know it's a little bit different in the UK, but that's the problem that I want to fundamentally solve. And I left Ticketmaster to start KID, to create a world where we create a better standard of tickets that are not just this very basic, boring, static version, but one that is alive, that is an RWA that lets venues and stadiums and artists to borrow against their future sales to get the capital they need to produce their shows, to fund their teams, and to control their resale, and fully own their data. So we launched KID, going on 3 years. Oh my God, time goes fast. 4 years ago now. We're one of the largest ticketing one of the fastest growing ticketing companies in the U.S. now, servicing over 7 venues. We're in over 50 across the U.S. 1.8 million users shopped on us last year, with over 10 million in sales. And the great thing about us is all of our venues own their data. All of our venues have access to capital using on-chain liquidity, and that's all possible through our protocol TIX, which is that new standard of ticket. So, in long and short, KYD stands for Keep Your Distribution, which on the app layer is a way for venues to have a solution to their needs outside of Ticketmaster. And TIX is the way that we make it happen.
Very interesting. Very interesting. What first got you interested in the kind of on-chain economy and the blockchain space?
Resellers. I worked at one of the largest resale marketplaces on the world. You know what I mean? So, when I Vivid Seats, I realized around tickets in the secondary market, it's actually like Wall Street. You have a lot of brokers buying tickets and listing spec tickets. Are you familiar with spec tickets?
No.
Spec tickets are a fantastic thing that effectively allows people, well, I wouldn't call them people. You'd think a scalper is a person on the street scalping tickets. No, these are companies as big as hedge funds. They are companies that list tickets they don't have, and you buy those tickets and then they source those because they have access to those tickets. And spec tickets can represent anywhere from 5 to 10% of any secondary ticket you're buying or more. So You have resale marketplaces selling tickets that don't exist, and they're doing a lot of pricing manipulation to see what the best prices are and if they can sell them. And the second thing, which was astonishing to me, was, you have this 40 to 50 billion dollar opportunity in resale, and none of that goes back to the artist, and very little of that goes back to the stadium. And I'll tell you why. When we look at resale for music, it's very different than for sports. Most people think that, sports teams are impacted just as bad as artists. They're not. Sports teams need resale, and I'll tell you why. Say that you take the Knicks, or for your European audience, take Manchester United. Say they're not doing too well in 1 year, right? What will happen is that the stadium or the sports team will tell resellers, hey, listen, you take these tickets off our hands and you buy them at face value. If you do this, we'll give you first dibs when Taylor Swift comes to our stadium. So they do an arbitrage. So resellers now take the risk of selling these tickets that are supposedly very low value because the team it's not operating at their best, right? But they get access to this, to a higher value good. It's an arbitrage. The shitty thing about it is it doesn't really work because it can only do that with a few secondary providers. So you have these three really unique components happening. You have resale that's really inefficient. You have fraud on both sides. Fans getting fake tickets and people being able to list tickets that don't exist. Third thing is that you have this marketplace in the back end, this economy that's happening between, different brokers and sellers, and it's not visible to the public or accessible to the public. And I felt that was wrong, so that's something that kind of spurred me into action around resale. And that's where I discovered, started in 2017, I discovered looking at the blockchain. And I realized there's a way to trustlessly, control this in a certain way, or have a way where you can do this in a way where, everybody can collect the royalties and be involved from the issuance of the ticket.
I just wanted to double click on one thing that you said, which was you're giving these venues or artists or whoever upfront capital based on previous ticket sales, similar to a Ticketmaster, but using kind of these on-chain primitives. Can you double click into the kind of stack that you're using there? And then also, how does that money go from being like on-chain in like some sort of DeFi protocol back into someone's kind of bank account and spendable within the real economy, quote unquote?
Yeah, no, great question. So gonna double tap at the very top layer. Liquidity is king in ticketing. So to secure ticketing rights, you have to provide upfront capital, because if there's not capital to produce the show, the venue has nothing. That is the preliminary piece. That is, since 1989, that has been the case for Ticketmaster. It has been the case for many different venues across the world. This is why a lot of Web3 ticketing companies fail. They try to sell venues or artists who have no control over ticketing. And I want to make this clear. Artists cannot pick their ticketing provider. Legally in the States, if a venue or a stadium has a deal, an exclusive deal with a ticketing provider, an artist must use that ticketing provider. So one, a lot of Web3 ticketing companies went in trying to sell collectibles to venues that need money, that need liquidity. Two, they try to sell ticketing to artists who don't control the stack. And three, and I want to make this very clear, NFTs don't functionally work. We saw this in 2002 with Magic Eden and with royalties bypassed. The technology promised three things: cost, speed, and the ability to control and enforce resale royalties. It did none of that. There's no proven use case where that's been successful. We ran on compressed NFTs for 2 years on Solana. The cost was insane. It did not work. And the final piece is, with compressed NFTs, you can't enforce royalties. So the tech didn't work. So now we have two baselines of understanding here. One, venues are the key decision maker in ticketing agreements, and they need capital. Two, the NFT ticket standard does not work. Now, three, how does liquidity source and work on KID? So are you familiar with Athena?
Mm-hmm. but the audience may not be. So giving us a breakdown would be super useful for anyone listening.
All right. For the non-crypto part of the audience, Athena is this platform in crypto that has about $7.5 billion on it, parked on it, like a savings account, where that $7.5 billion is earning in the ballpark of 6 to 8. I think the average trailing 30 days, 13%. Don't quote me on that. I'm not, a perfect human being, but I think it's between 13% APY. So what accredited investors would do, or anybody, well, Athena's a little bit more lax with the rules. What people can do is they can park their USDC, which is the digital equivalent of a US dollar, on Athena, and it can earn yield or interest of 13%. And in a world in crypto where things are very volatile, it's a great way to get some passive returns. So if you look at Athena, remember, there's $7.5 billion parked on it. Now, the way that Athena makes these yields is they run hedge fund strategies, trading tokens, and they're relatively secure.
From what I understand, they're delta neutral positions, which basically means that you're going long on one side of the market and going short on another. The risk is counterparty. So like if an exchange fails or whatever it may be, but essentially it's not too dissimilar to what a hedge fund would do in the traditional markets.
Exactly. So on KID, we have one side of our platform on Tix where effectively institutions, regular folks, can deposit their USDC to earn yield of anywhere from 10 to 12% in USDC from the cash flows generated by our venues and our venue deals. And our positions are very simple. Ticketing is a receivables financing business with a very low default rate. Effectively, what we allow is for any accredited individual or institution to get passive yields based on real-world cash flows from businesses that we, as KYD Labs, are collecting first because we're the ticketing provider, we're Stripe, and they have the ability to make a percentage on our fees. So the yield comes from the future cash flows, but effectively it comes from the 30% VIG we take as a business. This is much lower than what Ticketmaster takes, where it can vary from anywhere from 30 to 80% of the ticket value. So instead of there being neutral positions on Athena's side, on our side, they're earning yield from cash flows. The way it works is pretty simple. We collect all of our fans paying credit card. When people assume we hear, on the app they hear crypto, it's gonna have a wallet. No. We've obfuscated all of that to create a simple, easy experience. It's a phone number-based solution. They pay with their credit card. Once we collect those fees, we pass it along to a vault. And then from there, same kind of mechanics on the lending side. It lands in a vault. It gets passed from USDC and swapped into to Stripe. And we pay our signing bonuses to our venues. And then from there, as we're collecting the funds as a marketplace, we're passing those yields back and recoupments back. It's much more technical than that. I hope my co-founder can go into the deepest there, but it's effectively no different than how Stripe would operate on the receivables financing side, with exception to Stripe using their balance sheet and us using, providing this opportunity for, lenders. Now that being said, if you're a lender, it's yield with impact. When you're looking at Athena, it's you're just making money off. You're making your 13%, but with Tix, you're earning 13% by creating these experiences. You're seeing it come from Coachella. You're seeing it come from Dua Lipa, and you have the ability now to say, "Hey, my investment or my contribution has effectively created this show." And you see thousands of shows where it's getting from. It's not a singular show. It's a bond of thousands of shows across all venues. So I think that's the part that makes it really unique. It's the cultural impact of it.
When you're talking about those three key things that make it really difficult for anyone to crack the kind of on-chain ticketing side of things, you mentioned the NFTs as the standard, weren't fit for purpose, and then there's the kind of controllable royalty side of things as well, and then people misunderstanding who owns what and who has the kind of leverage here.
There's one piece you've missed too. They were selling collectibles to music venues and stadiums, which is the part that they need liquidity, not collectibles.
Mm-hmm. Okay, right. And so you've obviously solved for the liquidity piece with the kind of financing mechanism that you have, which is really super interesting. Talk to me a little bit about that kind of control that you can have on the secondary. And is that protocol ingrained? Like, what are you doing there to solve for that?
When you turn a ticket into a financial primitive like an RWA, this is what makes this whole thing possible via ticks, right? So as the ticket is being created, so the ticket has a price, it has an artist associated with it has a time associated with it. And when people are using KID, or even if you're not using KID and you integrate the protocol as Ticketmaster, you could set rules and the artist say, hey, I don't want this to resell at all. Or, hey, I want 20% royalty on resale. So the moment the event is created, that ticket that will be issued for that event already has the rules baked in. Remember, with KYD Labs, we're the app layer. But Tix turns these tickets into a programmable financial primitive. So now when this ticket is moving, it's moving and abiding by the laws that have been embedded in that ticket. So if an artist says don't resell, that ticket will move.
So let's say I'm hosting a conference for 300 people, and I'm like, hey, I'm gonna use Tix as the provider. This is gonna sound like a really dumb question, but like, do I have tickets already and plug them into the protocol, or do I natively create the tickets on the protocol? If that makes sense.
It's origination. So when you integrate Tix, you have an API and an SDK. On the API layer, you're effectively, the moment somebody checks out on your website or your ticketing platform, you have to click, it'll send you a hash where you can create you can visualize a QR code effectively, right? And then on the scanner side, you either have to use scanners that are provided by us, or you use the SDK to use or build into your scanners the ability to redeem Tix-based tickets. Because what Tix is doing is when it's scanned, the scanner is actually verifying its on-chain position from the ticket QR code and the rules of it. So if you were to use like a Ticketmaster scanner, it wouldn't work, right? Or in the case, let's take like a screenshot. Like, a KID, we get people turning on screenshots all the time. All of our venues, their scanners tell them, hey, listen, like, this ticket's not a valid ticket. Please pull it up from your KYD Labs account. And because our tickets rotate every like 2 to 3 seconds. So these are pieces where it's like, the problem with crypto today is that a lot of it seems very technical and difficult. In Web 2, it's always been APIs and SDKs. And with Tix, it's no different. You're just doing an integration. It's an integration that allows you to issue tickets in a different way and verify them.
Before we kind of delve into sports a bit more specifically, how would you summarize the state of the kind of blockchain ticketing industry right now?
Honestly, when I look at the space, there's a lot of great pioneers like Get Protocol, who built phenomenal infrastructure. And there's also, folks that I think have done a good job from the product side with like unique features like collectibles. Like, listen, I don't think they're a great way to win the market, but there's a unique fan loyalty piece that can't be understated, but you have to win the supply. I don't think right now it exists outside of us. Here's my take on this, and this is kind of spicy in my view. It's many $100 million plus has been invested in this space.
140 plus companies or something like that.
140 plus companies. We were the first ever on-chain ticketing platform to win an exclusive deal in the US. It's the fundamental misunderstanding of our business. When you go to Arsenal, you go to the O2 Arena, you go to Madison Square Garden, you need to have an enterprise offering that can deal with the liquidity needs, the needs of your customer. Is resale an issue? Yes, but it's not a negative thing for sports. This is the fundamental issue that I had with a lot of Web3 ticketing companies when we started off. They're like, resale is bad. And I'm like, well, hold up. If you go to a stadium who is hedging right now and making money off of resale to get a lot of distressed inventory out of their way, you're not going to win that deal. It doesn't work that way. It's the fundamental misunderstanding of ticketing as a e-commerce business versus a banking business, a credit business, a trading business. That is the fundamental shift between KYD and everybody else. And that's why we've been successful where nobody else has. And my hope is with Tix that many different ticketing companies that exist in Web3 today adopt that protocol and standard so they can compete on product and features like loyalty. And that's our goal.
And then taking another step back, I mean, the state of the ticketing industry more broadly is quite fascinating right now and will be for the rest of the decade. I think rumors that the NFL want to take ticketing in-house next year or the year after, quite a lot. And obviously there's the, it's in the courts now, whether or not the Live Nation monopoly will kind of get disbanded or not, and so on and so forth. Where do you see the broader market from that perspective?
To be completely fair, like we take a very opinionated stance. We believe Tix is going to be the thing that enables the NFL, that enables any ticketing provider that has a unique niche to get the capital needs they need to enforce resale royalties they want, but by owning their whole journey from a data perspective, the application layer. So given the DOJ today, where Live Nation and Ticketmaster are, and the DOJ and the FTC for botting or resale and for manipulation of and forcing artists to use their platform, there's a multitude of, that case is so summary, the multitude of reasons. We position our business to be perfectly aligned with a world where anybody can be their own ticketing company. Even Live Nation can use Tix and solve for those issues. And the biggest blocker for the past 2 to 3 decades has been capital. Live Nation has amassed a balance sheet of over $30 billion, dude. $30 billion.
Tough to compete with. But when you look at Athena, you look at, Pendle Finance, Maple, and you see these CBLs of over $1 billion. Like, I want to be clear here. Live Nation issues $10 billion to own their 70% market share today. That's beatable. That's beatable with on-chain liquidity. So there's 2 things that are going to happen in the future, are my bets. One is that institutional investors in crypto want serious businesses. They want businesses they understand. They want businesses that they get, and that receivables financing has been something that, from a private credit perspective, has been one of the oldest and largest parts of, $1 trillion private credit market. That is something that they get. Tokenized private credit, they get. The second thing is the ability for, ticket it for one integrator. So this year, our focus is getting integrators on board using Tix. For an integrator to use and tap into the on-chain liquidity to compete against Ticketmaster. Because the moment that Ticketmaster has competition on deals, and keep in mind, every service fee you as a fan pay is an interest rate. It's an interest rate. It's a rate that Ticketmaster puts because they got to recoup their loan on that. The more competition, the lower the fees for fans. So our goal is to use Tix as a way for the NFL, as a way for, the NFL's use case is a little bit different. The NFL is going to use it to control resale, to run their arbitrage more efficiently, and have a larger marketplace, not just of resellers, but now crypto natives can join in on the rush on bidding on face value tickets to get early access to Taylor Swift, and it's all programmatic. It's cool. It's much more efficient. And also verticalizing the kind of like fan ID stack, right? If you have every point of sale, every data point from a ticketing perspective, the kind of like know your fan problem that a lot of sports has gets solved for a lot easier.
Yeah, Ticketmaster holding that data hostage goes away. They know their fans, they have their liquidity, they control their resale. And it's literally just a protocol that verifies and issues tickets. That's all it is to them. From a music perspective, it changes everything. It allows music venues to pick their ticketing platforms based on merit and technical feasibility versus the amount of cash they get up front. Completely changes the dynamic here, right? So, a lot of good tailwinds on our side, especially with the revenue narrative that's going on too. Like, we've been proven in the wild. We've last year did about 30% take rate on tickets successfully. Over $2.2 million in revenue as a team of 5. So $440,000 per revenue per head on our team. So we're stoked. My final piece is I think there's going to be a huge resurgence of rock music. My 2 cents there. I think if you're a promoter or a booker or a festival owner, you should definitely double down and double click on rock and punk. I think there's a lot of, especially Youngblood, dude. That guy's amazing.
I'm not familiar with his game, but I may have to delve into that after this show.
It gives me young Ozzy Osbourne vibes.
Look, before we move on to part 2 and talk a little bit more about the sports industry specifically, let's hear from the sponsors that make Sporting Crypto possible. This podcast is sponsored by the Hedera Foundation. The most beloved sports brands understand that what fans want is simple, a reason to be passionate. The Hedera Foundation enables brands and fans to share their passion on-chain using the Hedera network, the most used sustainable enterprise-grade DLT for the decentralized economy. Welcome to part 2. Ahmed, I want to double click on the sports industry because obviously being Sporting Crypto, that's what we're here to do. I want to tell you a couple of stories. I mean, I've been asked by people from, on-chain ticketing businesses for introductions to teams and leagues and you name it. And my question is always like, why? Because they have a exclusive deal with Live Nation. What are you going to do with it? So what's the point of the introduction? And I've also heard people that have worked at competitors to Live Nation. And, this isn't me saying anything like I shouldn't, but they've had some untoward things done towards them when they've been competing for those deals, or they've had the customers that they're going after had some untoward things happen to them to ensure that they don't get those deals. So why is it such a tough nut to crack, the sports industry?
Here's my 2 cents. I think, Live Nation has been painted as the boogeyman for a long time. Having worked at Live Nation, these are very respectable, sensible people that don't do crime. I think the boogeyman of people saying, oh, there's bad things that happen to me, that's just a lot of rumors based off of people that just are not really educated on the space. I want to make clear that Ticketmaster, Live Nation are a Fortune, 500 company that operates under, multiple different regulatory bodies. And even though we have strong disagreements on how the world of the future looks like, I think the rumors around bad shit happening to sports teams, that's untrue. And I'll give you multiple reasons why here, okay? One is that a lot of these sports teams and stadiums are owned by bodies like the Saudi governments or different officials that have so much capital that it's virtually impossible for bad shit to happen to them. Now, when you hear it from your friends, oh, can I get intros to these big sports teams? I actually agree with you. Your point is valid. It's what are you going to do here? Do you got $30 million for the sports team to leave their contract? You don't. That's the beginning of the conversation.
I've been told that by someone who used to work at a really big sporting body who said, I love this stuff. I really want us to stick an on-chain ticketing provider into our systems, but this company that we use pay us $7 million a year. So they can't compete with that.
They can't compete with that. And here's the thing. You're not going to pay, if you're an on-chain ticketing provider, you're not paying $7 million. You're going to have to pay 10. You're going to need a case study. You're going to have to pay at least 20 to 30% more to win your first customer. And that's if once you have the money, you have to have the product that can service $50-60 million in volume. And how many people in Web3 have created an e-commerce product that could service 50 to 60 millions of users on the site, keeping that stability there? Even if you pass the first level, you still have to have the second level, the reporting, the marketing, all the unsexy stuff and back office tools to help a major sports team run efficiently their gate. So there's a lot of things that I think Web3 ticketing companies don't understand about the business, and I think this is one of them.
So you just touched on what was going to be my next question. What are the pain points that you get feedback from when you're speaking to sports teams and leagues, when you're saying, we can solve X, Y, and Z, and then they say, but what about A, B, C? What are those things that keep coming up?
Season ticket holder retention is number one.
Interesting. Okay.
So season ticket holder retention is the ability to have, once somebody buys a season ticket, for them to actually come and consume as much times as possible. The reason, when you look at sports teams, it's similar to the flights business, where effectively, think of it, your plane is paid for by your first class. It's not by the guys in economy and business class, right? So your season ticket holders, your suite holders, those people are consuming food and beverage the most, right? Having them come as much as possible is numero uno from what we've heard in the US.
It's true here as well.
It's numero uno. That's all they care about. Like, how do we grow that pie? How do we keep them coming back? So that is a big data play. It's an LTV play. You need to have a lot there to be successful. I think a lot of Web3 ticketing companies did not know that. And they went into fan loyalty for the regular Joe, when in reality, a stadium they care. Don't get me wrong. They care deeply about their fans, but there's a subsection of those fans, which are season ticket holders, that stadiums absolutely have a focus on. And that's like, there's really nothing else I could think of aside from naming rights, but you're not involved in that part of the business as a ticketing provider. So those are the two things.
Why does being kind of tech forward and using blockchain, for example, when you're trying to sell that, and I know obviously the rule number one of selling a blockchain-based product, never sell the blockchain, but like when you were trying to sell and solve for some of those issues, how are you thinking about that?
When we started Kid and we built Tix, we built on chain so we can get the capital we need to actually win the deals. It has nothing to do with solving a problem for the venue outside of resale, right? Like, the on-chain liquidity solves our problem, which is the ability to compete. The resale, great value add, but for stadiums and for even concert venues, the number one focus on the app layer is, can I reduce my return on, can I increase my return on spend? For every dollar it takes for me to market a show or a game, can I spend less and get more tickets sold? And can I have the data to execute those strategies? And can I get my most valuable customers to come back as many times as possible? The fundamental mistake that a lot of founders in crypto make is they forget why they're in this space to begin with. We as Tix and Kid Lab built our product and our infrastructure to compete competitively on the monetary issues that exist today, which is providing upfront advances, the banking component of our business, to compete against Live Nation. But our application, once we have the capital, we win on data and we win on retention. And that has nothing to do with the blockchain. It's basically like using Algolia for search, or using like, AWS on the back end, or having, the world's biggest, Silicon Valley bank, but it's also on-chain institutions. You know what I mean?
The blockchain does allow you to concentrate that stack vertically, right? And allow you to open source to the partners that you want to, or make that easier, right? So a good example I always use is American Express, right? If American Express have like a bunch of different vendors, but every time they have to work with every time they give you points and you want to spend them on a partner of theirs, they have to have someone going and doing that deal from the biz dev team and someone that manages that account, right? Every single time. And I guess what you could say with a protocol layer or any chain is that you can add some permissionless access to that, where someone can say, wow, there's a lot of liquidity here. There's a lot of like fan data that is siloed, but if I want to give value to that stack and vice versa, it's a lot easier to plug in. You don't need the middleman. You don't need the API. You're kind of like toing and froing on that one.
So privacy is a huge piece. Privacy is so massive, especially in the era where if you're dealing with institutional clients like stadiums, like Madison Square Garden, the O2, you know what I mean? Like, they don't want their fan data available to everybody.
Of course. What more I'm saying is, like, if you're Madison Square Gardens, you've got loads of sponsors, and then a local pizza restaurant can go, hey, like, we're going to give 10% off on game day. And instead of doing like a direct partnership, you can do it all via like just kind of like a permissionless layer within that stack.
Absolutely. Yeah. Like we've thought of a lot of different cool ideas that come from that, right?
That's what I was getting at.
That makes sense. Okay. Now I understand. Okay. So there's good examples of this, like us using Kelshi to do, like, you buy your ticket, you go and scan it in, and then it's like, hey, how many hot dogs do you think people are going to like eat today? Is it over under this? Who are you going to bet on to win this game? Is it this person or this person? And then having fan engagement pieces and fees that are generated from that go back to the stadium, and also be a way for obviously providing volume to Kalshi but this, since Kalshi's on Solana, we're on Solana, this is a great experience that can be made. And that's, to your point, it's interoperable.
I think that's going to be the thing that cracks a lot of this and makes it go from like something that's iterative and better than a previous product, something that's a complete game changer for fans.
100%, man. Here's the thing, man. There has to be a fundamental change in crypto of building real products to make sense in sports. And I think the allure of, being at the biggest contest in the world, or supporting your team. A lot of people come into space now. Really, it's the hardest segment in the world to deal with. And if you don't understand it, this is why we want to get stadiums on board building on this. We want to get teams building on this. We believe firmly that with Tix and with the infrastructure foundations that you put in place, that they're going to adopt this and going to do stuff, to your point, that is insane. That's beyond our thinking today. But the core thing is their needs are met first, right? And these possibilities are only possible now because we're in the door, So, dude, I'm super stoked for an interoperable world. Like the sports business right now on the ticketing side is 50 billion, 40 billion, right? If you have this piece where you're integrating all parts of the life cycle, you really get the tab to increase. So there was a great study that came out by McKinsey where they anticipated by 2032, over $1 billion of tickets will be sold.
It's not a small number.
That's current state. Imagine a state with the tools that we've discussed today. I think the TAM is unimaginable.
Amazing. Well, I think we'll leave on that really uplifting and good note. Thanks everyone for listening, watching. Ahmed, where can people find out more about you?
Please follow us at Tix Protocol, TIXPROTOCOL. Yeah, I'm probably going to get caught on YouTube for spelling that wrong, but it's okay. Follow us on Twitter on Tix Protocol, KYD Labs, the application layer, and my personal one, KYD NIMALI.
You can find me at Pet Barisha, PETBERISHA on Twitter and LinkedIn. You can find us on Sporting Crypto, YouTube, LinkedIn, Twitter, wherever you go. And then you can subscribe to the newsletter at newsletter.sportingcrypto.com. And just remember, none of what we have said during this show is financial, business, tax, or any other type of advice. And this content is for informational purposes only. Give us a review, subscribe, like, and all that jazz, and we'll have more content for you soon.